Good morning, everybody, and this is your S&P 500 day trade setups for today. So, a couple of things that are really concerning on this chart. And the first thing is that this breakout has not been tested. We've got a crossover of the moving averages now. We've got a crossover of the oscillators on the 8 hour, all indicating for another move to the downside. My personal opinion at the moment, looking at that engulfing bar and this pin bar that is formed, this is just a flash from the plan moves to the downside, and I suspect we're going to pretty much move back up to this area here. What looks like is forming is this. That there, so there, and then if I draw one down the bottom, we've got another one. So that is a consolidation pattern based on the move down. So the move down, consolidation, and then you're looking for a continuation. That's first thing. But if I delete, let's just do that. If I delete that and we look at it from a different point of view with this big pin bar, and there is a level that it bounced off right there. There's a level there. You can see it has been tested once before, but then we dropped below it, back above it, dropped below it. So, yep, it's a valid level. So we did buy off that 37.68. The question is, back the top, or are we going to look for rejection? I don't think we're going to find rejection here. We may. But there is another level in amongst all of this, and that's this one here. Right here. You see this range bar there, that would be a level. You can see we tested it there, then we got above it, broke back below it, so that would be your rejection level right there, 38.63. Now, drop down through the time frames, and you can see on the 3 hour we've got inside bar, and low, lower, low, diversions. Okay, so levels of the upside have not been tested correctly in my opinion, and I suspect we're probably going to be coming back to test some structure to the upside. The first one is going to be this area at 38.63, and if you look at this on the hour, you're going to see a little bit more structure as well. There's another area right there, and that's very close to the top side of this. Could be a case of a flag forming, looking to test an area, and there's another one there. So levels to pay attention, and this is something I would only look at in the first 2 hours, hour and a half to first 2 hours of trading in the US session, and that is a rejection of 38.50 or 38.63 or 38.73. If you get a rejection, then the rejection we're looking for is inside bars, engulfing bars, or pin bars. Off those levels, we just want a tail piercing the level, body must close below the level. Then we're looking for a short entry on the break of that structure, and we're looking to come back down to 37.68. If we don't reject that level properly, then I suspect we will either get above it and then be back above the moving averages or close up here. And volumes are going to start getting very thin from today, and next week's going to be even worse. So I'd be very cautious about getting into trade. This is my last trading day as well, and my last video for the year. So that's the structure that I'd be looking at now. If you look at the 15 minutes, the day before, everything's all right. We've got some good results coming through. Everything's cool. Then we've got a little bit of economic data out, and then everybody panics again, and the selling starts. So I suspect this is just going to continue as the volumes get thinner. And you can see what's happening on the 15-minute. We're in amongst the moving averages as well. And I think a safer bet for a short would even be this level here. So drop below it and I come and retest of 38.32 for a move down. Personally, I think I'm just going to leave us alone. If we do get into this area up here, I'll watch it pretty closely. But what scares me is that it's dropping below the moving averages. Moving above, here it moves above structured. You can see got the crossover, retested twice, third retest attempt, and then rallied. So you would think, oh, okay, we've got a pretty good upward trend forming, which is exactly what we had, thought process we had yesterday. And then you can see we basically ignored all of that, dropped below, got the crossover, we didn't get new tests, dropped rapidly, far away from the moving averages, and now we're kind of back in this zone. So, and we're in amongst the moving averages. So for me, yeah, it's either a rejection, solid rejection here at 38, 32, and then we're looking to break through the lows of this morning for another visit to the downside, or what you're going to find is you're going to find support up here, and then we're going to do a messy move to the upside. Now, this, when was this? The 20th, so Tuesday. So Tuesday, you can see this was a messy attempt at a reversal of a downtrend, which is textbook stuff. Then we got the uptrend, and then we just got a rejection of that completely. So could be a bigger range here, and you can see all the chaos that I've put in now on the charts. You can see that is kind of the range, to be honest. Upper end of the range, bottom end of the range, and we're kind of in the middle of the range, just below the middle of the range. So it does make sense to be looking for a rejection here or a move down. If we drop below the lows of yesterday, which I think is going to be pretty tough to do, you'll be picking up some of these moves to the downside here, but I think it's going to be really tough to do. Personally, I think what you've got here, you look at that pin bar, another pin bar, it's messy. It's really messy. Grouping of the oscillators to the downside with diversions from the previous swing low to the current swing low. There's a lot of bullish sentiment here, but ultimately we need to get it back above 3,900 for us to even start thinking about that. So for me, I think this messy structure is going to continue, and as we go into the close of the year, it's looking like a big engulfing bar here. So two solid months and then 1 month pullback. Big question is it just going to, is a pattern going to continue or not? Diversions here in the monthly, there's so much happening here. This is just, and the monthly is still in a very strong uptrend. And that's if you were holding positions from down here. But for those of us that got in up here, which a lot of people did, which is the normal cycles of the market, they're all panicking because they're all underwater, and that's why you've got the volatility. But people that were in from the early 2000s and or late 2000s, or sorry, 2010 area, 2009, 2010, they've had solid returns through the years. Anyway, that I'm gonna sit on hands today. I'm not really interested in this right now. I think the DAX has got some structure there which I'd be interested in chasing, but that's also suits me because be a morning trade rather than trading this US session. But if you are US based or you're trading US session, those are the levels I'd pay attention to. You do get rejections. Wait for proper rejection. Wait for the market to be open at least before you do it, and then take it on the break and take profit quickly. Don't try and hold on to things here because like yesterday, it could go against you in a flash. Anyway, that's it for me for this year. I hope it helps, and stay safe, and we'll continue in the new year and hopefully pick up some more cash on the way. Stay safe, enjoy the holidays, and we'll catch up next year. Cheers for now.